Good day, everyone. Well, markets have bounced toward new highs despite fears of an AI bubble, and as well as more signs of weakness in the labor market. And of course, we've got the Supreme Court battle over tariffs. But bad economic news currently is good for stocks because it raises the likelihood of dovish monetary policy. Also, global liquidity looks to be reaccelerating again after a bout of moderation. Now, central banks avoid using the politically charged QE, but rest assured some form is being used. The Fed could take a leaf from China's playbook, since their central bank now uses a long list of monetary acronyms, probably to hide what policymakers are really doing. Global liquidity is driving debt to its highest levels, but it's also driving AI and robotics, which are squeezing inefficiencies out of every corner. Companies can now drive more profits with fewer employees, which is usually referred to as good deflation. And this is when supply expands faster than demand. Of course, when most think of deflation, they think of the 30s, which was caused by a lack of demand and resulted in the Great Depression. But plenty of deflationary periods exist throughout history that were instead supply-driven and therefore economically bullish. And they occurred at major turning points, such as from 1815 to 1860, prices dropped an average of 1 to 2% a year. But this was due to rapid industrialization and westward expansion, so real GDP rose. In today's world, it is digital expansion due to AI. And then in the 1870s, prices fell 3% annually, and that was due to increased production in agriculture and tech progress in railroads and steel. So you had real wages rising and the economy expanding. And then throughout the late 19th century, there were bouts of deflation due to positive supply shocks, again, due to the advances in technology. So in all cases, deflation was supply-driven, which led to economic growth, not a depression. And since then, technology has brought prices down and created economic booms. When a major tipping point was reached, supply-side deflation and an economic boom resulted, and exponential growth in AI and robotics are currently pushing the planet into another tipping point. Elon Musk has made comment on this, and that said, while these are major tipping points, neither are yet making a big enough impact on the economy to reach a supply-driven deflationary state. And this is due primarily to the record amounts of liquidity being created by central banks. As we can see, world debt is at all-time highs. But AI and robotics are catching up fast to where Musk's estimation is that the US economy will hit a supply-driven deflationary period in 3 years. Now, Stan Druckenmiller once said, every serious deflation I've looked at is preceded by an asset bubble, and then it bursts. But that said, Druckenmiller's claim doesn't hold for 19th century supply-driven deflations, which were good deflations, and they did not precede asset bubbles. And so this counters as every serious deflation generalization. As to a looming recession, there have now been 1.2 million job cuts announced this year, and that's the second highest in 16 years, with layoffs currently set to match levels seen since the 2008 financial crisis. Nearly 2/3 of Americans say we are in a recession, yet Polling Market says there is now just a 33% chance that the US economy enters a recession by 2027, and that's down 11 percentage points since October 2025 and at their lowest level yet. The Atlanta Fed is estimating the third quarter growth in GDP to be between 3.5 and 3.8%, driven mostly by AI. Approximately 63% of all GDP growth is coming from AI-related spending. And this means that without the AI CAPEX boom, the US economy would be in a significantly worse position. And in consequence, the S&P 500 is seeing one of its best runs in history. The market just posted its 35% plus rally in 6 months over the last 30 years. And spending on data centers in the US has tripled since the release of ChatGPT in November of 2022, while spending on everything else is down 20% since the 2023 high. And this has created a bifurcated economy. So on the one hand, consumers are struggling from a rapidly declining labor market and high inflation, which necessitates a rate cut. And on the other hand, The largest US companies doing more with fewer employees are thriving as AI explodes, and rate cuts will add fuel to the fire. With cuts and global liquidity, expect more record highs ahead for the S&P 500. The biggest companies don't need rate cuts, but consumers do. The top 10% of US stocks now account for a record 76% of the US market, and these stocks have been pushing the S&P to new highs. The AI revolution is transforming just about all parts of financial markets. While AI is not in a bubble about to burst, it's in a structural transformation that powers 2/3 of US GDP growth. And we have $6.7 trillion in global capex from this year out to the end of the decade. We have hyperscaler contracts. We have multi-decade power demand. And layoffs reflect efficiency gains, not weakness. So the S&P's top 10 are AI stocks that are profiting from it. And over the last 200 years, whenever we've seen such transformative technologies add real economic growth, stocks have done well. AI is such a technology, so has spurred those such as Musk to call for supply-side deflation, which has historically been bullish for markets. Now, a report was sent out on why gold and silver should continue to rally. So do keep an eye out for pocket pivots, volume dry ups, Bible gap ups, and so forth. And while most precious metals names that we've mentioned are extended, there are two names that could become actionable. The first is SVM, Silver Victor Michael. It had a pocket pivot yesterday. Now it's coming back in today. And then there's PAAS. These are both silver stocks, silver related. And PAAS had a big move yesterday, quite extended, but it is also pulling back. So it might get into buying range. Gil, how are you seeing everything?
Sorry, somebody was saying there's no audio, and usually if it's us, everyone will be telling us that, so it's one person. So I'm just going to quickly message them.
Okay, sure.
I mean, you can hear me fine, right?
Coming in crystal clear, and yeah. I mean,
how are you?
Everybody else we have everyone's in if we have an audio problem, and not just one. When it's one, it's always something on their end.
Yeah. So what's going on? I don't know. I'm having a lot of fun being long silver. Not much else to say. And the miners have done pretty well. So, you know, we had a nice little shakeout this morning in the group. You can look at stuff like Newmont had a big shakeout this morning at the open. That's kind of typical. A lot of times you'll see the miners all get whacked at the open. I'm not sure. Sometimes they'll open up and then they'll come in, they'll get whacked, and then they turn around, and that's a shot to come in and get long. And so I do. Anyways, and I don't know if I'll be trading out ahead of the Fed, and we'll just see how that goes. But as the crowd is saying, they're expecting a hawkish quarter point rate cut, and it's like, yeah, okay, so everybody knows that. My thinking is they can be hawkish all they want, but what they don't know is that they're going to be lowering rates a lot faster than they originally thought, especially if they remain hawkish and knock the economy down. So we'll see how all that goes, but I think that's what you'll see happen. And so you'll see perhaps a lot of volatility right off the bat after they put out their policy announcement at 11 o'clock my time, 2 hours before the close, and then after or during Powell's speech, half hour later. So, you know, we're kind of in a wait and see mode because the market's up. This is now the 13th day of a rally off the lows that we saw when the indexes undercut the early October lows. So now here you are, you're hanging in there pretty tight. So it looks reasonably good. Or constructive rather. So, but you know, we'll just have to see how the market reacts to the Fed. I mean, I'm looking at interest rates and they're coming off. They've been rallying, but they're coming off today. So we'll see how things play out rather. And so I'm just going to go through. This is my daily notes list, a list of names I'm watching. My tendency is to think that if the market continues going higher, you're going to see a big commodity-based rally. And so I want to play commodity-related stocks, stuff stocks. So that includes the miners, the precious metals miners, but also copper, steels, possibly rare earths, and strategic metals names as well. So there are a number of those in this list. And so I'll go through them and give you some ammo, perhaps, to deal with the Fed or the market once the Fed comes out later today. But you see First Majestic come back up in a cup and handle, hanging along the 10-day line. I like the way that acts. This is probably the leading silver name in the market right now, and with silver at 61.27, $61. Okay, everybody was talking about $50 about a month and a half ago, and now you're looking at 61, and I'm thinking you'll get to 65, maybe higher by year end. So obviously I like the miners, and as they pull in, I'm a buyer. So you got Alamos Gold at the 10-day line, Aris Mining holding the 10-day line, Barrick Mining holding the 10-day line. Camco is uranium. My thinking is these should rally, so you get a pullback into the 50-day line, potentially viable. Core Mining, they announced that they're buying out New Gold, which is a copper gold hybrid miner, NGD. I've talked about that one before, and it's done pretty well. And so they're digesting that. This may create an opportunity down here along the 10 and the 20. Century Aluminum, Voodoo pullback into looks like the 20-day line just below the 50, but that looks okay. Sienna is one of your leading telecoms. These tend to look better than most techs, and so we had a pocket pivot breakout the other day, and it looks interesting. Cleveland Cliffs, iron and steel maker. They're actually the one of the most vertically integrated steel makers out there, coming into the 50-day line on a Voodoo volume signature. Here's a Global X copper miners ETF. Looks interesting here at the 10-day line. Copper as well looks interesting here at the 10-day line. Cisco Systems, another telecom, moving higher and actually making a higher high today on a closing basis if it closes here, but there's no volume here, which is interesting. Here's Dolly Varden Silver. This is an exploration company, coming into the 10-day line. We'll see how that plays out. Not my favorite name. Eldorado making new highs. Equinox Gold hanging tight along the 10-day line. So you see the constructive action here. Here's Eero Copper. That was a buy at the 50-day line yesterday. Freeport McMoran hanging tight. I like it at the 10-day line. There's a GLD, nice and tight. Notice how all my indicator bars are turning bright blue. That's very constructive. Hold on a second. I'm just checking something. Yeah, silver's moving nicely up off the lows of the morning. Hecla holding the 10-day line. Harmonic posted pocket pivot yesterday, and then you had a Bible gap up the day before on Monday, and so that's heading higher. There's Hecla Mining again. Hudbay Minerals bounced off the 10-day yesterday. So some of these were actually viable yesterday, and they're holding up again today, which I think is very interesting. Kinross Gold pulling into the 20-day line on Voodoo volume signature. Lithium Americas. I've been wondering whether this is going to get going again. There's a lot of tight action. You notice there's virtually no volume here. So all we need is some kind of push here to get it out of there. But, what will happen with something like this is you'll buy it here. It'll keep going sideways for the next 2 weeks. And then as soon as you sell it, it will take off, almost guaranteed. There's Lumentum Holdings. This has been a leading telecom semiconductor name and just continuing higher. McEwen, hybrid copper gold miner, pocket pivot yesterday at the 10, 20, and 50. MP Materials, just watching to see if you get a turnaround here. It's basically just going sideways. And there's no volume in here, so, it's setting up to resolve one way or the other, so we'll see how this one plays out. Nano Nuclear, Voodoo action along the 20-day line. Newfound Gold, this is the one that John Paulson is teamed up with to work the Donlin project. That's a nice pullback into 10 DMA support. And let's see here. Newmont Mining, breakout yesterday. That one looks fine. The 10-day line is your selling guide. Looks like it wants to go higher. Nova Minerals is I believe it's an Australian company with a big rare earth deposit in Canada. Or no, I'm sorry, Alaska. And so the government, U.S. government, in their move towards socialism, has put money into this name. So that may be viable somewhere in here along the 50-day line. Okla is another tiny nuke, one of these small modular reactor makers. Voodoo action at the 10 and the 20. Pan American Silver, big volume breakout yesterday. Perpetua Resources. Now, this is an antimony player, and they're coming in hard. There must be some news, but it was acting well before today. Quantum computing not really holding up, so not one I would go for. And Rigetti having a little trouble at the 10-day line. There's U.S. antimony coming into the 10-day line. Uranium Energy, another uranium coming into the 10 and the 20. So I guess we'll see how these play out, but these are names I'll be watching. You can see some are better than others. The precious metals names are way better than most anything out there, in my view. I'm not really a buyer of most tech names right now, because if you look at, say, Google's or Alphabet's acting okay. Here's Amazon coming above the 50. Apple trying to hold the 20. That may be interesting. There's Cisco again. Intel is coming into the 20-day line. Microsoft looks like a dog. Netflix is a dog. NVIDIA, it doesn't want to rally, so 50-day line has been resistance, so that's been a short there. Oracle reports earnings after the close, so this is a no touch until we see earnings. Tesla back above the 50-day, but not really going anywhere. And if we look at a lot of the big stocks, semiconductors, AMD doesn't really know what it's doing. Analog doing well, so off the 10-day line this morning. Applied Materials also doing well. The semiconductor equipment makers seem to be doing well, and so that they've been showing constructive action. ARM Holdings a dog. The same thing. ASML is another equipment maker coming into the 10-day line on a voodoo volume signature. Astera Labs is not one to touch. Broadcom hanging at the $400 level. So this creates an interesting situation. It's the first time it's gotten here and holding at the line, or actually holding at the century mark. So technically it could be a century mark long entry, and you use the $400 level as a selling guide. If it reverses and breaks, well, then you have a short sale situation on your hands. So see how that plays out. There's Intel again. KLA Tencor, another equipment maker hanging in there, like Lam Research. Marvell getting whacked. So I don't know. That looked like a shortable gap down on Monday. It may still be. Microchip trying to come up off the lows. Interesting rally. Micron back up to the highs. No real volume there. There's NVIDIA again. NXP, same thing, back up to prior highs. Cuervo. Did I say Cuervo or Corvo? That's it. What's on my mind. Anyways, 50-day line. Voodoo action at the 50-day line. We'll see if that turns into a long entry. Qualcomm's acting okay, pushing beyond the 50. Rambus also coming up, but no volume. SanDisk, this was the big leader. So you have voodoo action at the 20-day line. That's very interesting. So some of these are potentially actionable. My preference, though, has been to go with some of the miners, just because I've been getting a lot of juice out of them. And so, if they're working well, that's what I'll stick with. I also think that there is justification in terms of what the Fed is doing, even if they do have a hawkish rate cut today. I think eventually they're going to be backpedaling. So it's still going to be an area of focus for me.
Oh, I wanted to mention real quick here, since markets are forward looking, it looks like Hassett, who is quite a well-known dove, will get the Fed
right.
chair. So yeah, I mean, he's 6 months away. I think he gets appointed in May or June. So
yeah,
that's not far off.
No. And there's Texas Instruments, kind of a short at the 200-day line. But again, we're waiting for the Fed, and we'll just have to see how all of this plays out. But that's pretty much all I have. I got some ideas for you on various sides of the market. And so, you can review this video once we put it out, which I will post as quickly as we can. And then take it from there. We'll see how everything plays out. So any questions? No questions. So that's all I got, Chris. You got anything else?
One footnote with, Powell's been singing the same song. He's been hawkish. Every testimony, I think the last 2 or 3 market sell off. And I think they're pricing it. I mean, it's pretty obvious. All right, you can be hawkish again. And, markets are getting real tight in here. And it's pretty constructive to see this. I was actually expecting markets to be down more today, but they're not. So that's an important data point. And, I think the only way is, if he's a broken record, okay, whatever. But if he's not, if he goes a little lighter on it, then markets will be pleasantly surprised.
Yeah, and I think stuff stocks will be the thing to come after here. And as you can see, a lot of the miners are setting up still. So anyways, that's it for now, you guys. Thanks for showing up. Good luck after the Fed. We'll see how it goes. Take care.
So long, everyone.